5 out of 7 speakers are right at the same time. When consensus gets this tight, the move accelerates. Right now, oil is at $96.6, the 96th percentile for the past year. Historically, oil at this percentile has preceded demand destruction in 4 of 5 cycles. Says, the data needs to confirm. The commodity analyst says, we are in a commodity supercycle driven by underinvestment and deglobalization. In the next few minutes, I will show you who the data says is right and what it means for your money this month. The scoreboard just changed. A scoreboard flip means the numbers shifted. Pay attention to what moved and why. The commodity analyst is right and the data keeps proving it. Oil at $96.6. 111-day streak, Gammon's credit will blow out call is paying off. Yield curve at 0.50% and trending their direction. 35-day streak, Snyder just moved from wrong to right. Score 1 for Snyder. Dollar liquidity crisis. Yield curve agrees at 0.50%. The dollar analyst just moved from early to right. The dollar analyst dollar milkshake higher call is paying off. Gold at $4,762 and trending their direction. The volatility expert just moved from early to right. Score 1 for the volatility expert. Volatility expansion. VIX agrees at 19.5. McElroy is waiting on confirmation. The narrative holds, but the data has not validated it yet. 110-day streak. Too early to call Hartman right or wrong. The thesis is building but not confirmed. 104-day streak, score today, 5 right, 2 early, 0 wrong. This much agreement usually means the next move is fast. Watch the signals, not the opinions. Today's big question, are commodities in a supercycle, or is this the top? On one side says, the data needs to confirm. That is the setup. Everyone hears it on the podcast, it sounds convincing. On the other side, the commodity analyst says, we are in a commodity supercycle driven by underinvestment and deglobalization. Two smart people, opposite conclusions. So who is right? Both oil and gold are falling together. When multiple signals confirm the same direction, the move tends to accelerate. Oil at $96.6, 96th percentile, down 1.3% today. Gold at $4,762, 83rd percentile, down 0.6% today. Copper at $5.87, 91st percentile, up 2.1% today. Bottom line, the data is split. Neither side has a clear edge, which means the resolution is coming soon. If oil drops below $80, the supercycle call is in trouble. Right now, it is at $96.6. If copper breaks to new highs while oil falls, it is demand rotation, not a supercycle. Oil at $96.6 is in the 96th percentile, reversal territory. If it drops below the 75th, the thesis weakens fast. Gold at $4,762. We'll track it daily on the scoreboard. Phase 1 is the good times, but good times do not last forever. Here is how close we are to the edge. We are 67 basis points away from Phase 2, the phase where credit breaks and volatility spikes. There is no acceleration in credit stress yet, but we are watching the pace, not just the level. The trigger, investment grade spread crossing 150 basis points. Currently at 83 basis points. Pace is flat or improving, no urgency right now. Phase 1 means risk on is working. Equities, commodities, and real estate all benefit from loose conditions. Enjoy it while it lasts. For context, the last time credit stress built like this, credit spreads blew out and high-yield bonds saw drawdowns of 15%. The credit and rates layer has initial jobless claims, copper-gold ratio flashing red. Gammon says the Fed is breaking things and credit spreads will blow out. The data agrees with that assessment. Phase 1 holds with 67 basis points of buffer. Conditions favor risk, but do not get complacent. Wall Street trades the index. We trade the ground. Here is what the ZIP level data is screaming about today. HI, days on market, is spiking in HELO. Days on market in HELO move plus 98% in 30 days, now 206 days. Buyer leverage score, 82-100. Days on market is the cleanest leading indicator we have. Big swings mean liquidity is changing fast. AR, days on market, is spiking in Fort Smith. Days on market in Fort Smith moved plus 98% in 30 days, now 124 days. Buyer leverage score, 68-100. Days on market is the cleanest leading indicator we have. Big swings mean liquidity is changing fast. Stevens, WA, payment burden is past the breaking point. $99,131 WA, median home about $680,000 on about $36,000 household income. Price-to-income ratio, 18.9. When the math stopped working, sellers find out before buyers do. These are not hand-picked metros. They are the loudest signals in the housing data right now, chosen by the numbers, not the narrative. Today's debate asked, are commodities in a supercycle? Or is this the top? Let me show you what happened the last time we were here. Oil at $96.6 is in the 96th percentile. That means it is higher than 96 out of 100 days in the past year. In 2022, oil spiked above 120, then demand destruction pulled it back 40% in months. In 2020, oil went negative for the first time in history as demand collapsed. In 2018, oil dropped 40% in Q4 as growth fears overtook supply concerns. Different environments, different catalysts. But every time, the resolution came fast. The pattern is not the level, it is the speed of the move once it starts. Meanwhile, copper at $5.87 is in the 91st percentile. The last time both oil and copper were at these levels simultaneously, the resolution came within weeks. That is why the scoreboard matters. It tells you which speakers saw it coming and which ones missed it. History does not pick a winner here, but it does say the resolution is coming soon. Be positioned before it arrives. Here's what the data says to do right now. Stay alert on VIX. It is dropping 7.4% today. Fast moves demand attention. Avoid Denver at 36% payment burden. That is stretched territory. Phase 1 holds. No alarms, but the runway at 67 basis points is shorter than last month. 5 out of 7 speakers are right. The commodity analyst Gammon, Snyder, the dollar analyst, and the volatility expert. When this many align, the trend usually has legs. Every signal is live at analyze.builderslens.com. 7 speakers, 65 signals, 1 question every morning. Who is right? Subscribe, and I will see you tomorrow morning.